Hi, this is Peter Hans, and welcome to this week's episode of Between Two Chains. This week, I'm joined by Megan Knab, co-founder and CEO of Franklin. It's a hybrid crypto and cash payroll software. Megan is a wealth of knowledge and gives us really unique insight into different use cases of blockchain technology in, frankly, one of the most old school industries there is, a payroll provider. So we talk a lot about this, about stablecoin regulation, and a lot of the innovations that we see, as well as trends across Web3 and different crypto companies. I hope you enjoy the episode. Thank you.
This commentary is not intended to be investment advice, investment research, or recommendation. Please consult your investment professional for your own circumstances.
Hi, everybody. This is Peter Hans, and welcome to this week's episode of Between Two Chains. Today, I am joined by Megan Knab, the co-founder and CEO of Franklin. Franklin is a hybrid cash and crypto payroll software, which is, well, Megan, why don't you tell everyone first, including myself, what exactly that means? But in our previous conversations, it sounded really interesting, and I think you're going to have some unique insights both into a topic we're focused on, which is real world use cases of blockchain, but also a lot of trends that you're seeing in the industry, given who you work with.
Awesome. Yeah, thank you so much for having me. Excited to chat today. So Franklin is really a company that was born out of the struggle as a Web3 CFO. I was previously the VP of Finance at a company called Serotonin, which is the largest Web3 marketing firm out there. And we had a very interesting balance sheet. We were a services company. We would get paid in cash, in stablecoins, in tokens. We wanted to compensate our staff in kind. And there are a lot of real world struggles that operators experience when working in the Web3 industry and having a multi-currency balance sheet. And so we started off Franklin with the idea of automating a lot of these back office processes and also ensuring that the tax compliance was also automated. So Franklin is a platform where employers can pay their staff as they would normally. Like if you are a Web2 company, you want to onboard Gusto or JustWorks or Deal, Franklin has that kind of functionality. If you want to pay your team in tokens, we can help facilitate that and manage all of the tax compliance on the back end. And if you're a global team and you want to be paying W2 employees or contractors in the US, outside of the US with stablecoins, we can also help you there. So the idea is really to streamline a bunch of separate tools, eliminate the need for a bunch of manual transactions and costly service providers, and really have an out-of-the-box solution for being able to pay your team natively in Web3.
Interesting. So there's a lot there, and the primary idea for compensating employees of Web3 companies who primarily deal in digital assets and want to be compensated in digital assets just because of personal preference, or it better fits with the company? Or are you also an add-on, I guess, to a more, an ADP, and you have a certain employee of whatever Pfizer who wants to receive a percentage of their paycheck in Ether blockchain, and this would be like a perk, or additional benefit to those employees, if that question makes sense.
Yeah, totally. And it's both and. So in our early stages, we launched in September. We're a couple of months old. We're largely working with Web3 startups who either have crypto as part of their balance sheet, or they want to, like you said, offer it as an employee benefit. In the Western world, and especially in the sort of like fintech Western world, we see increasing demand for workers to have exposure to crypto as part of their compensation package. And we can do that in a couple different ways, depending on how the company wants to do it, whether it's paying in stable coins, whether it's distributing ETH or Bitcoin or other kinds of tokens, things like that. And then there's this separate sort of product line where, if you already have an institutional payroll provider that you've been using for a long time, we can partner in parallel with them to help facilitate the crypto side of things. But Franklin can also stand alone as its own platform.
So how does a W-2 work domestically then? If I get paid, say, in, not a stable coin, Bitcoin, right? Is my W-2 based on the value of Bitcoin when I receive my paycheck, or is there some sort of like other crystallization date? Because there's volatility there. Like you can have an environment, like if you got paid in,
Yeah.
2022 and you're taxed at an amount that, might be considerably more than you actually earned in USD
Yeah,
terms.
there are a lot of layers to this question. To
Yep.
start off, in the United States, there's a bunch of disseparate employment and labor law by state. And so one of the things that Franklin does is we look at each state's requirements for how to pay W-2 workers, and we'll sort of bake in those rules to our system. So as an example, there are certain states in the US that explicitly prohibit crypto as a form of payment for W-2 wages. So we know for those teams, they can only be paid their W-2 wages in cash. We can facilitate that. And a lot of these rules actually emanate from some case law precedent of coal miners in Appalachia who would get paid in coal miner company coupons, and then they're sitting in this closed loop economy and didn't have a way to exit. And so states in the Appalachia region then started creating rules or laws to say, okay, you have to be compensated in a USD denominated currency, things like that. So for most W-2 workers in the US, if they want to be receiving their W-2 wages in crypto, we'll facilitate that in stablecoins. To the extent they have other sort of like income, like they want to be distributed a bonus, or they're receiving tokens as part of a kind of like equity-like vesting schedule, we can also facilitate that. We'll bake it into the W-2. And it depends a little bit. As a general rule, we will mark the value of the asset at the time that it's transferred. Some startups, right, have kind of complicated token agreements that actually mark the cost basis of the token at a certain time. In which case we'll look at the rules for their token grant program and make sure that it's getting reported properly. But overall, if there's no such sort of like governing document, we'll just mark it at the time of transaction.
Got it. Okay, that all makes sense. So, and I jumped right into the question because I'm very interested in the business and use case, and I can see a lot internationally, which we could definitely get into. But let's take a step back. How did you get involved in this? Or it's obviously a young company. How did you see the need for this, and do others do what you guys do?
Yeah, so I think that for me, like my motivation, I've been working in the Ethereum space since 2016. And I'm an accountant by trade. So in the earlier days of when I was getting involved in this industry, I was struggling a little bit to think through like what can I actually bring to this environment that would be useful. So I had like lots of fun kind of like nerdy accounting intellectual questions about, all right, how do we reconcile these kinds of transactions? How do you think about reporting them on the balance sheet? And so wrote a bunch of blog posts about that. Or like DAO accounting, like how do you think about like reconciling transactions around DAOs, right? All these kind of fun intellectual exercises. But personally, the thing that has frustrated me about this industry is that we have all of these great builders that are really like pushing the edge of different sort of like financial technologies and other technologies empowered by public chains. But the way that they run their businesses is really very like Web 2, and wanted to think through like what are ways that you can actually operate a Web3 company natively using Web3 technologies. And payroll is like one of these really antiquated sort of like software industries. Seemed like a good place to start figuring out what are the pieces of infrastructure here that could potentially change, right? And so stablecoins, this is like a very cool innovation in crypto. It's not necessarily new, it's been around for a couple of years, but we still don't see huge use cases for stablecoins as a form of remittance, right? We see banks experimenting with sort of, can they at the margin sort of increase the speed and decrease the cost of interbank settlements, right? That's interesting. But are there more sort of like retail or B2B use cases that can make a difference now? And so there's so many cool payments technologies out there. Sablier being one of the early if not the earliest sort of streaming protocol out there, right? To make those things usable, there's just this Web 2 reality of like, okay, we have to pay taxes on it, especially if you're a venture funded startup, you have reporting requirements. And so how do we streamline all of that and make it easier to use these technologies as business operators and builders? And so that's been my personal motivation for this, and was lucky enough to corral a team and some investors together to get behind the idea.
That's awesome. I mean, I completely agree in terms of stablecoins. Just well, there's a lot there, right? In terms of scratching the surface of potential use case globally. I guess, are there certain stable coins that you guys only work with or focus on? Do you have a viewpoint on algorithmic stable coins versus your more audited stable coins?
Yeah, lots of personal takes. From a business perspective,
Yeah.
What we see companies using, like the customers on our platform now, they use USDC and they use DAI. At Franklin, personally,
Okay.
we will compensate some of our staff in DAI. Whenever we
Huh.
list a new token on our platform, we'll go through a legal review to properly whitelist and make sure that any flags or anything like that are cleared. This is a very interesting time to be transacting with stablecoins and helping to facilitate the transfer of stablecoins between entities, just given the regulatory environment. So BUSD as maybe the most interesting stablecoin of the moment, March
Mm-hmm.
2023, and seeing, the SEC really, it seems like to me, make a case against Binance via Paxos to
Yep.
sort of create some precedent around how stablecoins should be issued and by who. And so it is an interesting political environment for stablecoins and a regulatory environment for stablecoins in the United States. And so, we watch it pretty closely. Yeah.
So, two questions of that, I guess, before getting into the regulatory viewpoint. Why DAI?
So DAI, I think, is it's an interesting algorithmic stablecoin. As somebody who's been around the crypto space for a while, have seen the progression and sort of like sustained product vision from the MakerDAO team. And then there's another part of the equation that's much more sort of like less philosophical and more logical, that like sometimes the trading prices into DAI are a little bit better than USDC. And so we'll choose to use that instead.
Sure.
DAI has the benefit of having, a very, in the crypto world, at least a long track record of maintaining its peg. And so there's some psychological safety in using DAI. But, and part of it is also just, we have contractors that want to DAI. So we, no problem there.
Got it. Yeah, client demand is always a good reason. Well, so when you think about, or when you examine a stablecoin, and I guess this might be somewhat of a subjective question as well. What are you looking at, or how do you think a stablecoin should ideally be structured? Right. If Gensler came to you and said, okay, we're going to put a regulatory framework around stablecoins, design one for me, and this will be the roadmap of what will be approved going forward. Like, what do you think they should look like?
Yeah, what a question. And I would love, Chairman Gensler, if you're ever around, I would love to chat with you about stablecoins. But I think, the takes seem pretty standard, but for some reason have not really manifested themselves as much in practice. But the transparency of the reserves is obviously very critical. So the question there that I have is like, our current audit standards for Tradfi firms, right, actually, do they meet the sort of threshold bare minimum requirement for the sort of safety we should feel about stablecoins? So perhaps there are some interesting sort of new auditing standards, right, that you can have on chain. So some exchanges, right, have recently released in the sort of fallout or wake of the FTX scandal, right, proof of reserves. It's a valiant attempt, I think, but misses sort of half of the balance sheet that you need to be looking at. So certainly, and transparency means something different depending on the type of stablecoin that you're talking about. So right, in the DAI context, looking at the collateral ratios on chain, right, and are the assets backing DAI assets that we think are worthwhile, or are they really liquidatable in the event of a liquidation? And then certainly for more traditional firms like Circle, right? Like, what are the like underlying sort of collateral assets, right? Are they T-bills? Are they commercial paper, right? All those are questions to ask. And so far, I think Circle's done probably the best job in the industry of having transparent reserve disclosures. And then also on just like the application side, making it an easy stablecoin to transact with. So yeah, I think that's probably what I would say there. I think that in the crypto industry, and it's been this way for years, right? People speculate around Tether, and there have been some depegging instances with Tether. So it does seem certainly riskier to use, but it is also much more widely available outside of the United States as a USD sort of option in crypto, and so we can't discount it for that either.
Right. And yeah, I mean, it seems to me there's transparency and proof of reserves and taking Tether, right? That's something that they've been, moving, let's just say moving in the direction of over the past few years. But, any kind of Tether bear will just tell you that, you can't trust them, and who's to say? Because at the end of the day, there is no like regulatory body overseeing the actual reserves, right? So you could just, look at FTX. You could just say these are my reserves, these are my assets, and then at the end of the day, you're also turning everyone into a quasi like short duration fixed income analyst, where you have to analyze the credit risk of short dated CP or repo agreements with whoever. The one as much as I oftentimes find myself like be very political about this, like disagreeing with what Gensler says or his stance is. Like I think he's right in some regards, where at the end of the day there's a lot of the makeup of stablecoins that look almost like unregulated money market funds, right? Because there's very specific regulations around money market funds and average duration of the book, and what they can invest in and what they can't invest in, and max maturity. I guess the big difference is a stable coin. If you want liquidity, as a corporate doing like a corporate treasurer doing cash sweep with money market funds, like you're going to the money market fund issuer, you're getting a redemption, and you're getting your dollars back for your shares in the money fund. In a stable coin, like there is a secondary market for that, right? You could buy, sell, or you can redeem. So in many ways, it is a better mousetrap made possible by blockchain. I mean, is that do you see that eventually, coming to fruition globally?
Yeah, I think that the idea that there is just a more easily transferable digital dollar, yes. I think the thing that we are thinking through in the United States is who really gets to be the issuer of that digital dollar. Like, are we okay as from a monetary system perspective, having private companies issue digital dollars, right? So far it's been allowed to continue on, right? This idea that like you can redeem a digital dollar or a stable coin for the underlying sort of like money market assets, I think is interesting, or like not exactly something that we've seen as much, I guess. But
where can you do that?
Yeah, I mean, sorry.
Where can you do that? I've never heard of that.
You can't do it now. Yeah, you can't do it now. I was just
Okay.
speculating.
Yeah, I don't know. I don't imagine. I don't know why you would want to. Just seems overly
Yeah, I
complicated.
don't think. Yeah, I suppose what I meant was like just trying to draw the distinction between like, money market funds and stable coins. But anyway.
Sure. Yeah, I mean the money market fund, they're just investing in those assets to get a yield and paying out the yield. But I guess a stable coin for the most part doesn't pay out a yield. So it's just kind of like a quasi banking arrangement where there's, interest-free demand deposits in the form of US dollars to purchase a stable coin as the buyer of the stablecoin, and then the stablecoin issuer earning whatever that net interest margin is, right? It is like of 0% demand deposits and whatever they pay, whereas a money market fund pays out a yield, I suppose, with some
Right. And
expense
this is
ratio and stable coins.
yeah, maybe the key difference that
Sorry, I could
why
talk about this stuff all day.
no, I get it. Yeah, it's fun rabbit hole to go down. But this is also one of the reasons why it seems sort of like wrongheaded for like this notion of like all stable coins are securities to like be a thing, you know, because you're not generating yield from stable coins in like pure form, right? And so I don't know, some of like this SEC kind of activity is a little bit sideways to me with regards to sometimes how they approach stablecoins, but you know, we haven't seen any clarity on it yet. Just lots of sort of interesting wells and cases at the moment. I think if I were to like project the trajectory of stablecoins as a form of adoption, right, we'll continue to have these sort of like retail use cases, like the retail use case I would say that Franklin has of people just want exposure to the US dollar, whether they're a global contractor or whether they're an employee here in the United States. I think that we'll see that continue to grow. But at the sort of like governmental level, I think we will see sort of like early CBDC or central bank digital currency sort of like use cases just for, you know, like for bank settlement. And the question is like, how far or how long will that take to trickle down to the retail use case? Or even to just like more like enterprise use cases? Like, will private stable coins continue to be the like medium of exchange there? Or will we have a more sort of like top-down controlled government issued stablecoin?
Yeah, well, I guess it all depends on what you think the motivation of the U.S. government or the Treasury is, right? If it's to maintain the dollar as the global reserve currency, which obviously has massive advantages, and you're worried about, you know, a digital yuan, say, then having a CBDC in some form that's dollar backed and dollar denominated is very important. But the government doesn't necessarily have to be the issuer, right? It could be Circle or Wells Fargo or Bank of America or a host of others, right?
Yeah, 1,000%. And you know, that makes me wonder actually, like what's going on with JPM coin, right? Like this was something that was launched by JP Morgan, I think 3 or 4 years ago. Yeah, we'll see. Do these banks really pick it up? Like what signals is from like the government or the Fed do they think they need to like really in earnest like pursue this kind of technology? Will be interesting.
Yeah, it seems like there's a lot of well, twofold, I guess, you know, private blockchain focus, and experimentation. I mean, I think if you look at a lot of the big money center banks, you know, and they all have teams and they're all continuing to work on this. And, you know, you saw the Visa, MasterCard, you know, headlines from the other day, which were, you know, kind of immediately refuted. But, you know,
Yes.
ultimately it's a technology, right, that kind of everyone has to be working on. But the technology, as is often the case, is moving at such a rapid pace, and there's so many different considerations, you know, from a regulatory to a tax standpoint to, you know, a global like AML KYC standpoint, that's just like impossible to keep up, especially when you factor in, you know, the way politics works in this country. So it's I would say it's fascinating, but it's more frustrating than fascinating.
Yeah. Well, also like it's really hard for these issuers also to internalize that full stack of required services that you need. So I think yesterday or 2 days ago, it came out that Circle is no longer able to process ACH effective immediately, right? This has like a lot of downstream impacts on the companies that use Circle as a payments vendor. But yeah, I mean, it's very interesting, and I think that some of these private issuers will continue to right, experience some of these obstacles and roadblocks as time goes on. So, you know, I'm sure the team at Circle right now is hustling to find a new ACH provider. Uh,
Yeah, and how that is actually very interesting. And so when you so obviously you guys you not only work with companies and primarily Web3 companies, though I think before we started talking you did mention kind of a non crypto blockchain client that you guys have, which I want to delve into a little bit too. But let's talk about what's happening kind of in the banking world right now with obviously what's going on with Silvergate and because I'd imagine as you're a, cash plus crypto payroll provider, right? Having either banking relationships or at least being aware of like the trends in banking and crypto is pretty important. So I guess like there's no articulate way to pose this question, but like, what do you think is happening?
Yeah. Oh man. Well, it does seem broadly there's a constriction of on and off ramps for crypto companies broadly.
Yeah.
So certainly, like even just thinking about Silvergate, right, going kind of down the tubes pretty quickly and spectacularly, right? They bank whatever X percentage of the crypto industry. That's fairly significant. Um, being at ETH Denver this past week, right, I was met up with a number of different sort of banks that say they still want to be servicing this ecosystem and actually see the opportunity, right, in the absence of Silvergate and the sort of
Hmm.
downfall of the Zen network, right? I think a lot of these guys see it as an opportunity. And that's a great thing because we need like compliant US banking partners in this industry, whether we want to admit it or not. Uh, for us at Franklin, it's interesting for as a payroll provider, right? Our banking relationship really doesn't matter so much. It's the banking relationship between the employer and the employees at hand. And so
Hmm.
within, Franklin is actually the sort of like confluence point of like cash and crypto. There's not really a cross mixing, right? Where we're moving crypto into banks or anything like that. If there's cash, you want to distribute
Hmm.
cash, you can facilitate that through our payroll and ACH partners. If there's crypto, you can facilitate that through the smart contracts. And so in some ways, at least in our product construction right now, they operate independently and there's just like a very nice unified UI experience. And then we, on our side, merge the reporting requirements and the tax withholdings and all of that good stuff. But we will see as we get more sort of like information, I think, out of what has happened at Silvergate, and any sort of like
Hmm.
follow on sort of like regulatory activities that happen from that. We'll just be smarter, right? And for this industry, I think to prove itself, we have to meet the sort of like highest bar of requirements, and it'll be good as those requirements continue to manifest themselves. But it's
Right.
certainly like if you read the headlines, if you're only reading the headlines every day, it seems scary. I think the sort of like operator startup view on the ground is that these options still exist and there are many of them, and you can still kind of be a little bit choosy about who you decide to work with on the cash side.
Hmm. Okay. Yeah, that's consistent, I think, with what I've
Oh,
you
good.
see in real life, and not necessarily like headlines and clickbait. Do you guys have, I guess, are there other when you, I guess, compensate employees or are the payroll provider in whether it's stable coins or any other asset, will you send to any other wallet, or are there like considerations that you have to undertake in terms of like on ramp, off ramp, only using centralized counterpart custodians or wallet providers or something like that?
Yeah, I mean, so we're like an interesting use case, I think, because we like care deeply about being a compliant solution. And so, what does that
Hmm.
mean? It means we can actually help employers do things like run background checks on their staff, right? We any bank wallet address, regular home address that comes through our system gets checked against the OFAC sanctions list, right, to ensure that we are meeting the requirements as defined by the US government. And that's like a selling point for our customers, right? They may not want to be like ostentatious that like they need a compliant solution or anything like that, but they know they need it, and they want that kind of overhead burden abstracted away from them. And so we can help facilitate that. So yeah, it's been interesting, right? When we were, I think right before we launched our product was when the Treasury Department came out with the list of wallet addresses that had OFAC sanctions lists, flags on them. And so, you're scrambled to be like, all right, here's like another level of KYC, KYB that we have to maintain. And we'll continue to do that. I think for what's interesting, thinking about like if we're comparing traditional payroll like Tradfi banking to crypto, like there's still a lot of infrastructure that needs to be built in crypto. So for right now, we facilitate all non-custodial payments. So Franklin never takes custody of funds, right? They get distributed directly to self-custodial wallets to employees and contractors and things like that. It would be really exciting to have a standard where you can actually be paying people into their Coinbase account or whatever sort of like custody solution an employee wants. And that can actually open up the market quite a bit. And the infrastructure pieces that are missing are that most exchanges don't interact with smart contracts. And so what are the sort of barriers there, and like building partnerships and sort of like bridges and plumbing technologically to enable that kind of thing is kind of the next big hill to climb, I think.
So I guess, yeah, that's interesting because I never thought too much about the technology behind how your processing actually works, but it's all Ethereum smart contract based. So it would prevent, I guess, even a situation of an employer not paying a contractor or missing payroll or not or not paying an employee for whatever reason, because it's just in essence based on the contract.
Right. Yeah, it's automated. And yeah, thinking through, right, like comparing again traditional TradFi, right, to crypto payroll solution, like there are a lot of kind of primitives that you can play around with in the crypto side of things. So first of all, it is automated, right? There's less sort of button pushing or paper pushing around, right? Because we have this great innovation of smart contracts. It's also instant, right? So it can be done instantly, or it can be much more sort of like flexible kind of payment schedule. Whereas, most payroll providers will hold on to your cash for upwards of 10 days, or you end up entering into these complex and very expensive loan agreements to facilitate a faster payroll experience to be able to like manage your cash flows better. In, the crypto side of things, all of that can be settled instantly, right? Or it can be scheduled in advance. And so that's kind of an exciting innovation for sure, and something that we see customer demand in.
Interesting. I wonder if we see. I don't know how big this industry is anymore, but like I remember in Dodd-Frank, I was doing work on payday lenders, because it's just like completely predatory in terms of APRs they charge, and it's all based on the premise of like people, a large percentage of the population lives paycheck to paycheck, and if you don't get paid for 2 weeks or a month and you need to buy groceries, right, you go to a payday lender and they give you $50 and you pay them 75 when your paycheck comes, and it's like 500% APY, which was obviously curtailed a little bit by Dodd-Frank, but blockchain in essence would alleviate. I mean, you could pay someone every 10 minutes, for like real time, work on an automated basis if you'd wanted to. I wonder if there's like lobbying efforts against something because, innovation over time puts people out of business, right?
1,000%. And actually, when we were initially putting together our pitch deck, Janet Yellen gave this speech that was just so so perfectly timed for us. But she like herself cited public chains as a great use case for solving problems in the payroll industry, and cited a lot of the same information we did, but something like upwards of 15% of Americans, right, still continue to use payday lenders to be able to get access to their to have like liquidity sooner, right? And it's extremely expensive. It's expensive on the worker side and also on the employer side too, if you want to be enabling a faster payroll. And then there's just like this intellectual disconnect, I think, that exists that might be something that changes over the next couple of years as this technology becomes more sophisticated, which is just most workers in the US, right, are providing their employers with a 2-week loan on their time, non-interest bearing, right? And
Right.
is that the standard that we should continue to follow, right? Should we be better matching, right, the payment for your work with the time that the work is performed, right? There's like a lot to double click into, right? There's a lot to think about, like from a business cash flow perspective, that may make some of this a little bit impractical. But overall, like these are paradigms that we should be questioning. Like, do we want to just replicate the same old system that we had that's a little bit better at the margins, or do we really want to innovate, and really create a different kind of financial relationship between employers and their workers, right? That's pretty exciting.
Yeah, I mean, it's like anything else. You have to look at the motivations and who the ultimate beneficiary is of any change. And in a case like this, the beneficiary very clearly is the employee, right? So if you're a company and you have the ability to implement something that is going to benefit your employees, well, like that frankly in the short run and in the long run, it's just better for business, right? You'll have you have a perk to hire people with. You are you have happier people. You have people who have less to worry about IRL because they're getting paid in real time as opposed to needing to worry about their paycheck hitting. So yeah, I think it makes a ton of sense, frankly, and it's kind of a no brainer.
Yeah, I agree. Yeah, and our
Fascinating.
thesis is,
So
there are other crypto. Oh, sorry. I was just going to say our thesis around this is like
no,
maybe
please
more
go.
employers if it's tax compliant, right? There are lots of crypto
Yeah.
payments technologies out there, payment splitting, all that stuff is interesting, right? But there lacks this sort of context of the real world that we operate in. And so like, can we have these interesting Web3 primitive payment types and also have the reporting and tax sort of side of it figured out? And that's our product thesis at Franklin, is like, let's enable this new future of payments and make it be a good experience for Web3 operators.
Yeah, and even beyond Web3 operators, I mean, I would just think any business, right? Even if it's to your point at the beginning, even if it's an additional perk, and a certain percentage or a bonus or something wants to be received in ETH or Bitcoin or what have you, right? There's significant benefit to that, and I would think the biggest concern or pushback you would get from any corporate entity would be, yeah, how do I know this is compliant? How do I know that I'm following all the proper tax guidelines? Is it going to create more headache? And if you could solve for those, then I think this is it's addressing like a real world problem. It's really commendable and interesting. So congratulations on that. It's really
Oh,
cool.
thanks. Thank you.
So talk to me about, because when we talked about, I said, most of your clients, like kind of Web3 providers, kind of like a solving for, the problem that you initially identified. And then you mentioned, you do have one kind of crypto client that is, very international. And, when you're, I guess a multinational corporation and you're paying in, various currencies, there's a lot of complications there. And if you could pay in, stable coins, depending on where your employees are, that's highly preferable, I would imagine, and also potentially easier. So yeah, I would love to know like how that came about, and then if you're seeing that blueprint more and more.
Yeah. Yeah, it's interesting. We had just recently launched our software. We had maybe put out like one or two tweets about what we were doing and got a surprising amount of inbound from companies outside of the Web3 industry. And so,
Hmm.
one of the companies that we work with, they're a software services provider. They sell their services globally, and they receive payment for some of their services in the form of stablecoins. And they have, similar to the use case I was talking about before at Serotonin, they have a large contractor workforce, and so they already have stable coins on their balance sheet. They have contractors that want to get paid in stable coins because it's exposure to the US dollar, and it's also much cheaper. You could be signing up for a sort of like global payroll software that enables contractor payments in different jurisdictions that costs hundreds of dollars per worker per month, right? These are impractical things. And so for them, and for companies like them, Franklin can be a great solution, right? Because you can facilitate this compliant W-2 reporting, you can facilitate global contractor payments and stable coins, and it offers that kind of like flexibility. And so certainly, like just from a brand and marketing perspective, we're working largely with Web3 companies because that's the industry that we know. But there's this much larger sort of customer profile out there of just companies that are crypto adjacent, as I call them. Maybe they accept crypto as a form of payment. Maybe they just, have are looking to sort of decrease their overhead in sort of managing a global workforce. And all those things are sort of like unsolved problems at the moment, that Franklin is just starting to like scratch the surface on of like better empowering, global employers.
Yeah, the global contractors is a great call because that is definitely a headache. And you're thinking about, like international. Well, I mean, I remember even, my old company, if I got like a check internationally, I had to like physically walk into a bank branch to deposit the check. Like it was such a pain. And this was what, like 4 years ago, right? It's not like I'm talking about the early 90s. And now, yeah, I mean, it solves so many, it makes things so much easier. And again, like I always go back to who are the ultimate beneficiaries, and if it's kind of a win-win, which it seems to be the case, and you can solve for the automation of it, like it's kind of a no-brainer.
Yeah.
Wow. Well, this is so. How do people learn more about Franklin and what you guys do and follow your business?
Yeah, for sure. So our website, hellofranklin.co, the big button on the front is, you're scheduling a meeting with me. I'm happy to show you our software and talk with you about, your use case and how you should think about setting up your back office even. So happy to chat there and excited to meet more people through there. And then we're also on Twitter at Franklin Payroll.
Very cool. Well, yeah, thanks, Megan. I mean, I didn't know, kind of what to expect when you joined, but this is, it's fascinating. I really enjoyed the conversation and having you on, and hopefully some people, some potential clients heard about you guys for the first time and can grow the business because it's definitely in my eyes solving a real need, and I think it's a great, real world use case of blockchain, and just kind of like opens up the Pandora's box of in a good way of possibilities.
Thank you. Yeah, I'm super excited to be building this company, to be honest. And yeah, it's fun. Like we launched a few months ago, we're getting a bunch of traction. And so, this is like the most fun part, I think, about building a company at this stage. So I really appreciate you willing to share your platform with me and yeah, for having the conversation.
Anytime, absolutely. All right, well, we'll have to have you back and check in at a later date, and hopefully we can get some continued progress in regulatory clarity in stablecoin world.
Yeah, yeah. Sounds good.
Awesome. All right, well, thank you so much for joining, Megan.